In this presentation, we will continue on with our comprehensive problem for the payroll register, going to our second pay period, that being September. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We have our first pay period here of August. We're going to continue with that information for September. Note that we don't have another header line down here before the September data input sheet. What we're going to do is we're just going to freeze the pane, which is going to be an Excel kind of trick or technique that we're going to use, and that's going to make it so this cells above this line will stay the same. Now before doing that, I'm going to scroll all the way to the left, and then I'm going to scroll down just a little bit because I don't really need to see these two rows when we freeze the pane. Or these two rows, I'm going to scroll down just till we just see this header here. And once we do that, I want to put my cursor right above the header and all the way to the left. So you want your cursor in A4. Then we're going to go to the View tab up top. We're going to go to the Windows groups. These are the groups. We're going to go to Freeze Panes. Select Freeze Panes, and then we will freeze the pane. Pane has been frozen. No more pane, it's frozen. And then we're going to scroll back down, and you'll notice that the top rows will stay the same. Now, just to get perfectly down there, if I scroll down with my scroller, it goes too far, and I want one more row. To do that, I'm just going to go down here and just click one more time, and that'll give us on our tab here. So it takes a little while to get used to that freeze panes. Once you have it, it can be useful depending on the worksheets that we are using. Okay, so we're going to go a little bit faster this time. We're going to use the similar information. Note that so if we go too fast, go back to the prior pay period and it'll be much the same. That's what's great about accounting and payroll. It's going to be much the same from period to period once we do this a few times, especially if we're working with the same company. So we can get this information is going to be exactly the same. If I scroll back up, in other words, the marital status and the number of exemptions won't change unless they're changed with an updated W-4. So typically I can even just copy these. I can right click, copy, and go down here and just say that those are pretty much the same. Right click and paste. We're not going to make any adjustments in this problem to the number of allowances. Typically they'll be pretty much the same for most employees unless again they make a change to the number of allowances, or someone gets married or stops being married. So then now we're going to go through and we're going to enter the number of hours. So for Anthony Moore, we're going to say it has 163 hours for the month of September. The rate is going to be the same as the prior month, 25. The regular pay then, we're just going to go straight through and calculate this. Everything that's the same, we won't put as much detail into it. We'll do it right in Excel here. We're going to say this equals the 163 hours times 25, the rate. Now note if I hit enter, it'll go down to the one below it. If I hit tab, it'll go to the right side, which is what we want. So I usually get in the practice of hitting tab, it goes to the right. We're going to say that there's 3 hours of overtime. And again, these hours in the overtime we would have to calculate by a timesheet or a time clock. So I'm giving you this data that we would have to compile through whatever time instrument we're using. It's some kind of punch in, punch out time clock system. So we're not, so there's 3 hours. Also note that the hours are overtime would have to be calculated however that is done. Typically 40-hour work weeks. Anything over 40 hours would have to be overtime. I'm going to give us the overtime hours here just for the purposes of the problem. So that means that there's 163 plus 3 or 166 total hours, 3 of them overtime, 163 regular time. The OT rate is going to be the regular rate times time and a half. So this equals the 25 regular rate times 1 the time, 0.5 and a half. So that's 150% of the regular rate. Tab. That's going to be 37.50. Then we're going to take the hours, overtime hours, times the overtime pay rate. So this equals the 3 hours times the 37.50 pay rate. Tab. Now I'm going to add up the total columns, or the total earnings, which is going to be the regular plus the OT, and that's going to equal the regular in F12 plus the OT in I-12 and tab. Now we're going to go through and pick up the earnings for OASDI, FUTA, and SUTA. Now note OASDI, no one's going to hit the limit yet because it's only the second pay period, and that's pretty high limit for the wages we're talking here. So no one's hit that, so it can just be equals the same. FUTA, however, is an area of difference here. FUTA, we picked up the same number, but there's a 7,000 cap. So if I go over to the earnings schedule for like Anthony, because it's only the first month, the cumulative earnings are just the first pay period's earnings. So it's really just this 4,025 is the only earnings in the prior month. But if there were more than one pay period, we'd have to go back here, not just to the prior month, and see how much has been earned. So that means that we need the lesser of what he got paid this time period, or what takes us up to the cap of 7,000. So in other words, to get to the cap here of 7,000 minus this 4,025 means that we can only have 297 of wages. If the wages he was paid is greater than that, we have to pick up the 297 and not go over the 7,000 cap. So I'm scrolling back to the left. We're going to go back down. Well, so we can see this data. So we can pick up that same number here since there's only one pay period. So we could say he got paid this time more than that amount. So it was 2,000 something. So we're going to do a subtraction problem. So it's going to be 7,000 minus what he got paid to date, which is just this one pay period. So he needs another 2,937.50 to get up to the 7,000. This plus this now being the cap out for his life of 7,000, or of the company's income, the life of the company income. We're going to do the same thing for SUTA, except the cap is 8,000. So again, if whatever he needs to get up to 8,000 is less than what he got paid, then that's what we need to pick up, which it is. So we're going to say this equals the 7,000 minus what he got paid prior, and that's going to be the 2,000. I'm sorry, 8,000 should be 8,000 equals 8,000 minus what he got paid prior, and that's going to be the 3,937.50. Okay, so that's going to be the new thing. This is basically the new thing this time. And when we go to the next pay periods, we'll see that this basically goes down to 0. So now we're going to do the payroll taxes. So we're going to scroll to the next item. So we are in N12. I'm going to scroll back down so we don't get confused on what we're calculating. So here we are. We're on the OASDI. We're going to pick up the OASDI wages times 6.2 or 0.062. So this equals, pointing to the 4,187.50 times 0.062 and tab. Then we're going to go to the Medicare, HI. We're going to say this equals, and we're going to point to the total earnings because there's no cap, so we don't need a Medicare wages, times 0.0145, 0.0145, what, I missed the 1, 0.0145, so 0.0145 tab, and then the FIT. This is going to be where we need to go to the table again, so I'm going to scroll back to the left. Now it's going to be married for, and the wages are going to be 4,187.50. So we're going to go back here. We're looking for the tables for married monthly for, and the wages are 4,187. So monthly married, we're scrolling down. 4,001. So it's going to be between here and here. So I'm going to go over to the 4, and there it is. So this one, 187. 187. Yeah, I think that's it. So I'm going to go back here. And note that, again, most of the time, most people aren't going to calculate this FIT manually like this, but it's nice to do from time to time so you can see kind of the complications of it. The computer will typically do a better job and make a less likely to make an error in this area. Note if we do make an error on the FIT, it'll wash out basically the refund. You should get a greater or lesser refund on the end of it when we do the 1040 for the individual. So when they do their 1040, they should get the refund or perhaps have to pay if there's an error involved in it. If it's an error involved in the OASDI or the Medicare, we have possibly more of a problem in some cases because it may not be refunded when the taxes are done, and therefore we would have to amend that. But these two, it's less likely to make an error because they're very easy to calculate. Okay, so we're going to go to the insurance. We're back to the insurance here. It's just going to be the same. We're going to give the insurance number, and the insurance number will be, I'm just going to pick the same up from last time. Last time it was this number. Tab, the union dues are going to be the same. Tab, the 401k is going to be the same. So tab, and again, those will be dependent on the conditions. Then I'm going to scroll back down. So see this, I know I'm scrolling around a bit. Then we're going to do the net pay, which is going to be the total earnings minus all the deductions, OASDI, HI, FIT, group, union, and 401k. We'll do that with a formula. This equals the total earnings minus the sum. Double click the sum function, and we're going to pick up the OASDI all the way to the 401k, shift 0 and close it up. And so there we have it. So here's the gross pay minus all this stuff, gives us the net pay. Now we're going to do the employer calculations and the employer taxes for OASDI. Same, it's going to be the same amount, but I like to do the calculation again, kind of a double check, I guess. It's going to be this 4,187 times 0.062. And that's going to be the 259.63, which is equivalent to here. We'll do the same for the HI, which is Medicare. So this is going to equal, scrolling back over, the total earnings times, if you go back over so we can see it, times 0.0145. That's going to give us the 60, which should match what we have here. And then the FUTA, we got to take the FUTA wages, which is different than what we calculated in the last pay period. That's going to equal this 2,009.3750 times 0.006 tab, and then SUTA, which is going to equal the SUTA wages, if we scroll back over, which is this one, in M12 times 0.054, and enter. And so there's going to be that information. Now we'll do the same thing for the next employees. I'm going to scroll back over all the way to the left. We've got Sandy Lewis, married 4. We're going to go through our hours here. We're going to say that the hours were 161 this time. We're going to have the same pay rate of 28 per hour. Multiplying out the regular pay is going to equal, in F13, this 161 in D13 times the $28 an hour and tab. Then we're going to get the overtime hours, which will be 1. We have 1 overtime hour. We'll calculate the overtime rate again, which is going to be equal to the regular rate times time and a half times 1.5, 150%. Tab. Then the overtime pay is going to be the 1 times 42. We obviously can do the math in our head, but we're going to calculate it so we have the same formula. The 1 hour times the 42 equals G13 times H13, tab. Then we're going to add up for total earnings the regular pay and the overtime pay. So in J13 equals the regular pay in F13 plus the overtime pay in I13, tab. Then the OASDI wages, no one's going to have hit that one, or they're not going to have hit that 128,400. So it's just going to be the same, equals that same number. We're going to have the same issue with the 7,000. They will have hit that. So what we need to do is just get the enough wages to get to 7,000. It's not going to be the full 4,550 for FUTA wages. We need whatever it is to get to the 7,000, which will be less than this amount. We'll do that with a subtraction problem, which will equal the 7,000 minus the prior period's wages, because that's what it was up to this date. There's only one prior period. And that's going to be 2,573, meaning this plus the prior period equals the 7,000, which is the cap. So we can't use the whole amount because it capped out. Same thing with SUTA, except there's an 8,000 cap. So equals 8,000 minus the prior period SUTA, 4,424, tab, then this number plus the prior period goes to the cap of 8,000. So we can't pick up the full number here. We have to pick that up. I'm going to scroll back down so we can see our headers better. And we'll go through the OASDI. So this equals the OASDI wages times 0.062, tab. The HI or Medicare equals the total earnings, because there's no cap, times 0.0145. And then the FIT, so we're going to have to scroll back over and we'll find that FIT for Sandy Lewis. M, married, 4 monthly pay period. The amount that we're looking up is 4,550. So if we scroll back over here, we're looking for our tables, which are here, and we're looking for the married monthly, the 4,550. So here's 4,550. Now that one falls on the line here. Typically we'll do the higher amount. So we want the higher amount because that'll withhold a little bit more, and that's like a little bit more conservative. We'd rather have a refund, in other words, at the end of the year when they do the 1040 than to owe money. So we're going to try to err by withholding a slightly too much than too low, although the dollar amount's probably pretty minor. So here we have the 235. We'll go back to our table and we're going to put in, scrolling back over to the FIT, 235. Group insurance, I'm going to say that's the same, so we're going to pick that up. And again, this could vary. I mean, this could differ depending on the terms, but I'm going to pick up the same for the union dues. I'm going to say the 401k is going to be the same. It may vary depending on the earnings, but we're just going to keep a standard or fixed 401k contribution. It just depends on the options that were agreed upon between the employer, employee, and the plan. Then we're going to do the net pay, which is going to be the total earnings minus all the deductions and taxes. So this equals the 4,550 minus the sum, double-clicking the sum function, highlighting the OASDI to the 401k tab. It's going to close up. That's good. So there's our net pay. So there is the net pay. Now we'll calculate the employer taxes. So OASDI should match this amount, but I like to recalculate it. So we're going to say this equals the OASDI wages times 0.062, which will be that same 282. The HI or Medicare equals, and we're going to scroll back over, it's going to be for the total amount here, times, and then it's going to be the 0.0145 tab, and then the FUTA, we're going to say equals the FUTA wages, which will be this amount in L13 times 0.006 tab, and then the SUTA will equal the SUTA total in N13 times 0.054. Enter. I picked up the wrong number there, so let's delete that. It's going to equal, we're going to scroll over just one more to find the SUTA number, times 0.054. All right, so that looks more reasonable. Next employee, scrolling back down, we're looking for Jill, and so Jill here has a single 1 and 140 hours on regular pay, and the hourly rate is 31. Regular pay will equal the hours of 140, the normal regular hours, times the $31 an hour. And then we're going to have the overtime. We're going to say that there was 0 overtime. Overtime rate, we'll still calculate it even though there's not any overtime to keep in conformity with our formulas, equals the 31 regular rate times time and a half, or 1.5, 150%. And then the overtime pay, then, we're still going to calculate it even though it's 0, equals the 0 hours times the $46.50 overtime rate. Then the total earnings is, we're still going to calculate both numbers even though there's only a regular pay, equal to the regular pay plus the overtime pay. Then the OASDI, they're not going to hit over, Jill hasn't hit the overtime yet hasn't hit the OASDI cap yet. Therefore, this is just going to be the same number. Tab. The 7,000 will have hit the 7,000. So same thing on the 7,000. We're going to say this equals the 7,000 minus the prior time period. Tab. And so the prior time period is what she has year to date in earnings plus the current time. That makes it the 7,000. Therefore, we're going to pick that number up instead of the wages here. Same thing for the SUTA except for the 8,000 cap. So it's going to equal 8,000 minus the SUTA wages from the prior time period, our tab, that's going to be 2,590. This plus the prior time period is that $8,000 amount. Then we're going to have the OASDI. So I'm going to scroll back down. The OASDI will equal the OASDI wages times 0.062, tab. The HI or Medicare will equal the total earnings times 0.0145. Then the FIT, we're going to use our tables again. It's going to be single, 1, and 4,340. So going back to our tables, we got to scroll up to the single table. So married. This is a single table monthly, and we're looking for 4,340, and the one column is here. So 4,340 is going to be in between here, and the one column is this one because that first column is a 0 column. So that's going to be 491. Wait a second, that's 4405. It's actually 4340 we're looking for. So 4325 to 43. It's going to be between this column, which I believe is that 474 that we want. Yeah, that 474. So we'll go back to our Excel worksheet. We're going to pick up that 474. I'm going to scroll back over. FIT will be 474. Group insurance, we're going to say that's the same as the prior period. So I'm going to just say that's the same. No union dues. 401k, we're going to say that's the same just to keep this simplified. And then the net pay. So we'll calculate the net pay. That's going to equal the total earnings minus the sum. Double click the sum function of the OASDI to the 401k. Then we're going to close that up. That's fine. Okay, and then we want the OASDI for the employer. Recalculating it equals the OASDI times 0.062. That's going to be the 269, which should match here. And then when the HI is going to equal the HI wages, which is going to be just the total. Scrolling back over, times 0.01145, tab. Then we have the FUTA, and the FUTA will equal, I'm going to scroll back over to the FUTA wages, which is at L14 times 0.006, tab. And then the SUTA, which will equal, scrolling over to the SUTA, times 0.054 and enter. Next one, we're going to scroll back over. Last employee, married 3. We're going to say this is a salaried employee. So this time we're just going to say salary for the regular pay. Actually, we're going to say salary for the regular hours. And we're going to say that it's 35,000. And the total earnings is just going to be the same. So we'll just say that equals the same amount. Now the OASDI, she's going to get a lot closer here because she's got that 35,000, but she's not there yet. She's at, I mean, if we look at the earnings so far, 35,000, and then the 35 is the 70. So we got to obviously be careful here on the OASDI. She'll be the first one or the only one, that will possibly hit that cap. It hasn't yet though, so it's still the 35. And then the FUTA already hit the FUTA here. So there is no FUTA. So it's gone, and it's going to be gone for the rest of the time period. So this always happens in the early periods or the early payroll periods. The FUTA is going to be everything, and then it's going to fade away. And then obviously if we weren't monthly, if we were something other than monthly, then it would fade away a little bit more slowly if we paid people weekly rather than monthly. But it's going to go away after the first quarter or the first quarter and a half, typically for most employees. Okay, and then we're going to say the OASDI will equal the OASDI wages times 0.062 tab, and then the HI or Medicare will equal the 35,000 times the 0.0145 tab, and then the FIT. Now it's going to be the same. We can do the calculation again, but well, let's take a look at it. If we scroll back over here, I'm going to scroll back up, and we have to use these tables up top. So we'll do this at least one more time. We might not do it next time. It should be the same, but we'll take a look at this percentage calculation. And so we got to go all the way up past these tables because the tables are not going to have enough numbers in order to calculate this. It won't be high enough to calculate the wages. Now remember, what we're going to do is we're going to scroll back up top, and we're going to pick up this number first. So 345.80. So 345.80 times 3, because she has 3 exemptions. So this number, this 1,037.40, is what we're going to decrease the total earnings of 35,000 by to then use in the table. So this minus the 35,000 is 33,962. If we scroll down to the correct table now, that's the number we're going to use, at 33,000 or so. We want to find the monthly payroll table, and we're going to find the 33 is going to land in between here, in between these two numbers. So we're going to say 5,348 plus 32% over the floor, which is going to be this 27, right? This first number, the 27 here, 27. So if we take out the calculator here, what we're really doing is we're saying how much is actually in between this section. Well, we said it was 33,962.60 minus the floor of this category, which is 227,213, means that there's 6,749.60 within this range, and that's the 32% range. So times 0.32, that's how much is going to be taxed at the highest 32%. And then we're going to add to it what was in there before from prior brackets, which we can calculate from the floor already, which is going to be plus this 5,348.26. So that's going to be that 7,508. So I'm going to go back over here and we'll see the formula for all I'm going to do is copy the formula. So if we scroll here, the formula's here. I'm going to copy this and just put that full formula, right click and paste 1, 2, 3. So I just right click and copy, right click and paste. And then let's just take a look at it. If we double click on it, it looks really complicated here because we don't see the subtotals. So it's almost easier to calculate this not in this kind of fashion, but we can do it this way, and it's nice to be able to see. So what we're taking is this 35,000 minus the exemption amount of 345.8 times 3, because there's 3 exemptions. So because of the order of operations, it's going to multiply first and then subtract. And then it's going to take this bracketed number, whatever we get there, and say that's minus the floor number, 27,213. And then it's going to take that. It's going to be really the number we calculate this whole thing at the highest bracket of 32% times 32%, then plus the 5,348, all other brackets added up. So that's going to be that number. Then the group insurance, same thing as the prior month. So we'll just say that equals the 1,500. Nothing in the union dues, and then the 401k will be the same. And so the net pay, I'm going to scroll back down a little bit, will equal the total earnings minus the sum, double-clicking the sum, highlighting the OASDI to the 401k tab, and we're going to say yes, that's what we want. And then the OASDI should be the same here, but I'm going to recalculate it, equals the OASDI wages times 0.062 tab, and then the HI or Medicare, and note this number matches this number, equals, we're going to scroll all the way over to this 35,000 times 0.0145 tab, and that number should match this number, and then the FUTA equals, and we're going to scroll over to the FUTA wages, and it's 0 times the 0.006, and then the SUTA wages, which is also going to be 0 times 0.054. So there we have those numbers. For more accounting information and accounting courses, visit our website at accountinginstruction.info.